Welcome to Stock Market Investing with the ARMR Report. I'm Brett Rosenthal, and this is the ARMR Insider Morning Call. We do this every morning at 8:30. The object is for us to get prepared for the trading session, get ourselves ready for day trades, swing trades, or investing opportunities. Today's a big day. The market's at a major inflection point, and I wanted to share it with all of you what we're thinking today. The ARMR investing way, the whole point of what we do here is try to bring together a flow of institutional professional information with the individual investor running his own capital. That's you. And so we call it the ARMR investing way. It's a three-stage process. We build our whiteboard. That's fundamental research. We use institutional grade algorithms to tell us when to add and subtract capital. I'm going to talk about that a lot right now. And we tie it all together with a stop loss discipline. And that's our approach. So please remember, I'm sharing with you my own personal approach. I use all of the things I'm going to be sharing with you in my own portfolio. I'm not telling you what stocks to buy. I don't know you. I couldn't possibly give you investment advice like that. But I can share 30 plus years of experience doing this. And today is an important day. I shared this picture with you to start because that's really what the market looks like. She's either going to relax and get a great tan, or she's in trouble. Okay? That's what's happening in the market today. So the ARMR algorithms, and we have 7 index algorithms we use to drive all of our big picture risk decisions, right? And then we drill down into individual stocks or groups, and we use algos for that. What I wanted to say today, first of all, is to remind everybody that for the last couple of weeks, and I've been lamenting this almost every morning on these calls, that what allows the ARMR Report to get aggressive and buy stocks aggressively is confluence. Okay, what we want to see are all 7 indexes moving in unison. We saw that last year, 24th of February, market collapsed. We went to 100% cash. The market dropped 40%. Why did it have that response? Because every index looked exactly the same. That told you that the elephants in the room. What's the point of the algos? They're to help us sniff out what the elephants, the institutions, the multi-billion-dollar fund managers are doing with capital. They're the elephants on the Serengeti, okay? We're just cheetahs running through legs. We don't want to get stepped on. So when the herd starts to run, right, we want to take advantage of that, or we want to protect ourselves. So last year, March 24th, all the indexes gave us the same risk on opportunity. So we had confluence. So now we look at today's market. The market of 2021 is not the same market as 2020. Those of you who have been following me for a long time know I was saying last year over and over again, this is a unique year. I've almost never seen a year like this, okay? And what we're going to do is revert back to the mean. What is a normal year in the stock market? Let me tell you something. It's not all fun and games. A normal year in the stock market, is moving and checking and cycling in the corner, hoping the puck can pop out into the slot for a quick goal. That's what it is. It's not all fancy 3-on-1s. It's not breakaways. It's literally the hard work. It's the grinder that makes money in most markets, right? And then you catch a wave and net worth really runs because you've done all the work you had to do to protect yourself during times like this. So for the last few weeks, what's really concerned me is that of the 7 indexes, we have a couple of indexes breaking out looking great and the other ones looking terrible. So that's no confluence. And so it makes like a washing machine type of market. One day you think sky's the limit, you're making a fortune, and the next day you give it all away and more, and you're saying, what the heck is going on? Well, that's what happens when you get a market that's torn in 2 different directions. So how do we deal with this? First of all, I'm going to take her down, but just remember, this is the risk monitor for us. So you're looking at a peek of the ARMR report, all right? So when you ARMR insiders get inside the ARMR report, we have portfolio, our ARMR portfolios, our whiteboard, our video coverage, and then there she is, the risk monitor, okay? And she's calling for yellow. She's calling for yellow right now. We can't get green. Green happens. The risk monitor is red, yellow, green, right? Red, obviously, risk off. All the indexes are telling us get out of the market. Green is when they're all in unison telling us it's time to put capital to work. This is the best market. Right now, we're yellow. That could be frustrating, but that's what it is. There's just a lot of cross currents. So we have to sift through the grass, trying to find where's the money really flowing and try to continue to build our portfolio in that direction. I'm going to get to that in a minute, what stocks we're looking at. But before I do, I want to scroll down here, and we have a ARMR Investing Rules of the Road, and I want to share it with you. Okay, if we go through the ARMR Investing Rules of the Road, what we have here is rule number 10 I wanted to go over with you. Okay, rule number 10. The morning mantra. It's very important because after a day like yesterday, when your head could be spinning, you have to pay attention to this. What I like to say every morning is I have no memory of the day before. I don't allow success or failure yesterday to determine what stocks I should buy or sell today. I begin every day looking at the top of the ARMR whiteboard, assessing whether or not an asset needs attention, and I execute my investing strategy with ruthless precision. Okay? In a market like this, you cannot force your will on the market. You can't be disrupted or disturbed by action on one particular day and have you completely obliterate your portfolio because of fear or vice versa, greed, and get over your skis on one sector because you think that's the one. This is a market to balance your approach. Last year, it made a lot of sense to put 100% of the portfolio in disruptive growth, right? We made a lot of money. Okay, this is not a year like that. You want to break down your portfolio into groups. You want to say what groups you want to focus on, and you want to cut your exposure. You don't want to have too much in any one space so you can manage the volatility. All right, so work on that morning mantra. It's going to help you. I don't care if you lost money in something yesterday. If it looks correct today, if your stop was too tight, put the capital back to work. All right, now let's look at the market indexes and what the problem is. So first of all, we're at a major, inflection point. This is either a double top and the market's going to break down below the 50 again. And what we really have is waning momentum. Okay, this is the uptrend line, the middle line, going all the way back to the breakout last year, this green line. Okay. And what we're seeing now, and this is, usually a sign of a problem, is we're seeing that the market can't get to the top of that channel, right? It can't get to it. It's doing that. It's not making it back to the top of the channel, which is a problem. That usually tells you that there's distribution going on. And what's worse now is this. Are we getting some type of double top here in the market, right? So this is a major inflection point. If we break down below the bottom of the Andrews Fork and the 50-day moving average again, chances are we're going to have a real correction and it's going to get ugly and we better be protected. Now, that's not a prediction, okay? I'm not in the business of guessing what's going to happen next. I'm talking about scenarios and how we react to them. We read and react on this trading desk. I don't guess this is going to happen, so I'm going to gear my whole portfolio that way because the market makes fools out of most of us most of the time. If you can't deal with that fact, you should not be investing. There's no ego in this. You can't get angry with yourself for making a decision that was wrong yesterday. You have to just make the right decision today. That's the beauty of the market. Every day, it's a fresh start. Clear your mind, execute correctly. All right. So what we have is the NASDAQ 100, boom, looks terrible. Momentum stocks look god awful. Here, you want to take a look? All right. So of course, the S&P is an amalgamation of everything. So it's the index we use the most, and it's either double topping or it's, or it's going to blow out to the upside, right? What would blow it out to the upside? Well, the Dow looks phenomenal. That's a serious breakout in the Dow. To a lesser extent, small caps, they broke out, but then they came back in here, right? The value index looks like the Dow, and value is blowing out. This is something I noticed the other day, and I was telling ARMR Insiders, it's so crazy. You guys remember this guy? Most years, I'm a buyer of high relative strength stocks. I'm an O'Neill acolyte. I learned at the knee of William O'Neill. That, literally, probably 35 years ago, I started reading chart patterns, reading on the O'Neill books. I mean, this is the strangest market. The best looking chart patterns and the stocks that we're actually making money on in our portfolio have relative strengths of like 5. I mean, I never buy stuff like that. But look what we just bought yesterday. We bought this a couple days ago, right? And here's just a perfect example of it. Lockheed Martin was a no-brainer down here. That's an unbelievable bottoming wedge chart pattern, right? Tight to the wedge. We bought it right in the wedge, right here as it broke out, and the stock is just going straight up. It had a 5 relative strength. Okay? So the value index looks great. And then you flip to look at the momentum index and you see what the problem is in the market. Okay? Something's really wrong here. Now, one of the reasons I'm on here chatting with you is I'm very concerned that you all are banging your head against the wall, continuing to trade the successes of 2020. I talk to a lot of you. I handle a lot of incoming email, direct messages on Twitter, and a lot of you want to know, when can I buy, I don't know, things like Pinterest and Snap and Chewy and let's buy Digital Turbine and like all of these stocks that were huge winners last year. There will be a time again when they set up. But I submit to you, the first thing we need is for the momentum index and the NASDAQ 100 index and the IBD 50 index to give us a risk-on buy signal using ARMR algorithms. We don't. We have risk off. So if the big index algorithms are about the footprint of institutional investors, okay, and they're stampeding the other way. And yet I have a lot of individual investors asking me, can I be buying these things? Look how cheap they are. The elephants are stampeding the other way, and you want to sit down in the middle of the Masai Mara and have a sandwich. This is what's happening. You can't do it. I have them at the top of my whiteboard, what I call top shelf ideas. Pinterest, Snap. I mean, I love these names. Etsy. I'll definitely own them again. I can't do it right here. ARMR Index Algos are going to give us risk on at some point in those indexes, and we're going to see those stocks coming out. So what I'm guessing, if we're lucky and the market's not going to break down. So what are the scenarios? All right. Number one, the S&P is going to break down and this whole game is over and it's going to get ugly this year and we're going to have to get out of Dodge. Okay. So that'll be terrible. And we all know how to deal with that. We'll have stop losses hit and we go back to cash, and that's just the way it is. And we wait for the next setup. The other scenario is we get this continued bifurcated market. So the value, the Dow, the industrial type of economy reopening stocks keep going up. And these other names, while they have days of brilliance, are really going through distribution. And so they're not going anywhere. They're great day trading stocks because they can pop 10, 15% in a morning. That's why I have 3 different baskets in my own portfolio. I have day trade, swing trade, investing parts of my portfolio. So I put all of those favorite names into the day trade, and I just keep looking for setups. And if I get on it and it pops on a given day, I book my profit. But when it comes to swing and investing, these names just aren't set up right. So on the one hand, we have one scenario. Market just breaks down. We have to go to cash. That's a no-brainer. We have stops. That's how it works. We all take a break for a week and try to get our heads right and wait for the next setup. The other scenario is we keep getting this split market. In a split market, the last thing you can do is chase the rallies. Even in your favorite industrial names, you don't chase them. You buy weakness. So on the Fed day, I was telling all insiders, and you guys can attest to this, as the market was ripping higher off of the Fed news, I say, we're not buying the rip. We're not buying this rip. We'll see how the market reacts tomorrow, which was yesterday, and we'll decide what we're going to do. Okay? And of course, the market imploded. So the market was ripping on the Fed news. We weren't out there buying all of these 2021 leaders. Now, yesterday, I'll tell you what we did add to the portfolio. Okay? AT&T. All right? We added AT&T to the portfolio. This is the invest side of our portfolio. The risk reward is great. Stock drops below 28. We're done. Trade's over. In the meantime, we're going to collect a 7% dividend yield. I think this company is in the process of a turnaround. I know everyone hates it. DirecTV, blah, blah, blah. I get it. Okay. But everyone's known all of those things. Whatever you want to tell me about AT&T and how horrible it is, I would submit to you that everybody, every institution has known it since March of last year, and the stock's not going any lower. So either they get the turnaround right and the stock goes up 50% from here while I collect a 7% dividend yield, or the stock keeps meandering around this point and I collect 7% and I write calls against it to increase my yield. Is that as sexy as buying a Bitcoin stock? No. But it's smart risk management, and it's how you invest over a long period of time, depending on market environments. All right? Look at the other stock we added to the portfolio yesterday. Okay? McDonald's is breaking out of a massive reverse head and shoulders. Okay? I don't have time to go over the reasons for why McDonald's is doing that. But if you look at McDonald's, if you look at Lockheed Martin, if you look at AT&T, those are the stocks that are collecting institutional flows of capital. There's not a lot of risk. There is upside if the market continues to grind higher. Now, if the whole market implodes, none of these things are going to work, and we're going to have to go to cash. Okay? But if the market continues to grind higher, which I think it's going to do, I don't know, but I think it's going to do that because the Fed keeps adding liquidity and there's more and more and more stimulus packages and blah, blah, blah. So I don't really see the market collapsing in a world where at any moment the Fed will start supporting the bond market. So where's the collapse going to happen? So what market participants, the big guys, are doing is they're hiding capital in other names like Boeing. Okay? We bought Boeing right in here. The stock's breaking out. You know, General Motors. Look at the names that are in the ARMR portfolio that are making money for us. It's not last year's winners. It's this year's winners. Okay? I mean, I saw FedEx had an earnings announcement. It looked pretty good. That's a perfect chart pattern. I bet FedEx would be a nice addition. The transportation index looks delicious. This is the transports, IYT. That's where money is flowing. And that's a bullish market. It's just a grinder market. Don't chase rallies, buy weakness. That's where my head is today. That's what I'll be doing this morning. So what will we do on today's, hang on a second, guys. The dog just walked in. The door's open. Lucky walked in and wants to tell all of us to buy shares of Chewy. And I keep trying to tell her we're not buying Chewy right now. Okay. Anyway, day trading. What are we looking to do in the day trade room? I'm going to be trading. I'm going to really look for a triple Q trade. Okay. I like to buy weakness. When things get whacked, and then they set up support at a key location, and we use spot gamma to help us with that. If we get ARMR day trading triggers at the right spot gamma location, that's where our highest probability of success is day trading. So I'm going to focus on the cues. We had a good day trading yesterday, even though the market cratered. We had nice trades on in the morning, made some money, raised our stops, moved out. On a day like today, though, I'm really looking at the triple Qs, and I might just trade the Qs, but I'll put on usually a position size 5 to 10 times larger than whatever I do in an individual stock. So I have the same potential upside. My risk is tight like anything else. In a market like this that's wild and aggressive, I don't want to have to manage 5 or 10 trades. If things start to go bad, I don't want to have to be putting in 5 or 10 orders. So I'd rather just trade the index, trade it big, one order I have to execute. That's probably how I'm going to be working on in the day trade room. Will I be adding any stocks to the ARMR portfolios today? I might, and I'm going to keep leaning into the industrial type of trade. That's where the money is. And as hard as that is, because I am built to buy growth stocks. That's what I like to do. But I'll leave you with this thought. You cannot force your will on the market. You have to read and react and be honest with yourself about what's going on in your portfolio. Okay? Any questions real quick before I split? At 9 o'clock, we're going to meet in the day trading room. All ARMR Commodore subscribers, day trading room, 9 o'clock to set up our day and figure out how we're going to trade. Any questions, guys? What do we got here? Good morning, Captain. Good morning to you, my friend. All right. What about Gilead? Gilead's an interesting idea. It's the same type of pattern as an AT&T. I mean, all the news is in it. We know how bad it is and blah, blah, blah. And yet the stock is holding up with a decent dividend and a stock buyback program. I should put that back on my list. I really should. I mean, they keep coming out with bad news and the stock doesn't go any lower. What else do you need to know? I don't care about XPEV. That's not the type of a stock I'm trading in a market like this. It's a day trade. I could trade it on an intraday process. Apple and Chewy. Yeah, okay, Apple and Chewy. So, Apple's just not a name I'm trading right now, and there's no alpha to me in Apple. I don't see any alpha there. So, I'll trade some big cap names, but I want to see a reason for it. You know, when I'm putting together a portfolio, for instance, there's a lot of transportation stocks you can own. Which ones do you buy? Do I just buy the train stocks? Do I buy? I mean, maybe FedEx because they have blowout earnings, and you know, there's a I want to see a reason. I like turnaround stories. I like a new product. I like a company that's spinning off a business to recognize value for shareholders. Okay, as an example, that's going on at XPO. Full disclosure, I don't own the stock, but I'm just saying, here's a chart pattern. This is an interesting looking pattern, making a pennant on top of a huge breakout, and they're going through spin-offs. So they're trying to recognize and unlock value for shareholders. That could be an interesting idea. You know, something like that. So I can't just buy every stock. I want to try to figure out which ones, and I look to buy the ones that have their own catalyst. All right, maybe we'll see. I don't care about growth in China, net sky limit. I appreciate your suggestion, but that's not the type of market for me. I'm not. There's no way I'm trading China right now. What does spot gamma look like on the indexes? All right, so I guess I'll just wrap up with that thought, and I got to get out of here. But so spot gamma, what's spot gamma telling us? When it comes to NASDAQ and why I'm focused on the NASDAQ today as a trade, there's a huge amount of put of puts that are rolling off today. And it's the put structure in the NASDAQ, while it could go a lot lower, if it doesn't go a lot lower, the decay that's going to happen in those puts could spark a pretty nice rip higher as people sell their puts and dealers cover their short position, right? And if it doesn't happen today, it probably is a pop on Monday morning, okay? So, but I'm looking for the opportunity today. I'm looking for weakness at the open. Right now, it's up 0.5% at the open, the NASDAQ. I want to see it come down, test support, not make a new low, and give me a risk-on buy signal, okay, using the ARMR day trade trigger. If that happens, I think that'll spark a lot of people to sell their puts thinking, hey, I had a good week in my Q puts and I'm going to close them out, which will force dealers to buy the NASDAQ, and you could get a rip into the close. That's what I'm looking for. I don't know if it's going to happen. I'm just saying at the top of my list of hopeful day trades that might show up. If I see that, I'm not going to question it. So gapping up at the open, look for a sell-off to close that gap and test the low. If the low holds and we get a day trade trigger, usually back above top day VWAP, volume weighted average price, I'm going to put that trade on aggressively because I think you could get a rip higher based on the gamma situation. Okay? All right, guys. I will thank you all for joining me this morning. I just wanted to share that with you because it was an inflection point today, and I wanted you all to be aware of our process here at the ARMR Report. And I'll see you all on Saturday, tomorrow, 11:30 for our usual market wrap-up discussion. ARMR Insiders, I'll see you in the Slack room where we're sharing ideas all day. And of course, ARMR Commodore, in 3 minutes, I'll see you in the day trading room. All right, guys, take care. Have a safe day trading out there. Don't forget, spend more time protecting your capital and capture upside when the window's open. That's what we're doing at the ARMR Report. Take care, guys.